Ladies and gentlemen, welcome to the Fintech Frenzy. Today, we got lots of fun news to talk about, stuff that I just wasn't around yesterday to be able to cover. So, not only do we have stuff to catch up on over the last weekend, but also a lot of stuff that actually dropped today as well. So, we have quite the list of news. How's everybody doing? Hopefully, you guys are well. Today, for the most part, I want to talk about a mix of SoFi and Shift4. I think that they are putting out the best news right now. Not the best news, but the stuff that I'm most excited to cover. On the other half, you know, I have some stuff for Affirm. I have some stuff for Square or Block. What else we got? We got a little bit of PayPal. Yeah. Let's jump into it, okay? SoFi employee here. I watch basically all the content you and Tevis make. Really appreciate it. What division of the company do you work in? Which is more painful, PayPal or SoFi? Hey, it's a close debate. We'll have to see. They both hurt. yeah, we're gonna get rocket ships for 650. Oh man, it's a painful day these days, but what can you say? That is, I guess, part of the journey in long-term investing here. We're gonna go through waves of no love in the stock, and hey, we can blame it on rates, but overall we've got to take it on the chin or sell out. And either you don't like holding on to companies with growing financials, or you're looking for something with a little bit more momentum. But that is not myself, at least not for SoFi. I just believe in the management's overall thesis in the stock, and they've delivered so far. And actually, if I can show you this, I have it up on my screen now. I'm not the only one buying. CEO Anthony Noto bought another nearly 31,000 shares at $6.50 just on the 14th of June. So I bet if it holds down, we'll see some more purchases. But yeah. See, we're getting these messages again. $2 soon. I've heard it all before. I've been here. Good luck with that. We're closer to rate cuts than not, You think there'll be any reason for dilution in the near future? Well, I mean, there will always be some level of dilution because of, stock-based compensation, stuff like that. But I don't see them doing anything. I mean, they definitely fixed up their capital structure. I don't see them doing that anymore. But yeah. Rate cut when? I mean, my ability to sort of determine a rate cut would be as good as the next person. It's kind of an impossible journey, but my assumption is that we'll get rate cuts this year. Whether that's September or something, who knows? I love me a good buzzword, rate cuts. What? I don't think you understand the word or the idea of a buzzword. Buzzwords like filling people with or like saying things that are supposed to capture something that doesn't mean anything or is used to exaggerate or combine everything. If you're talking about a lender who is lending out personal loans and then selling those loans to other institutions, it's like any other fixed income product, okay? The coupon rates that you buy them versus the risk-free rate, if that spread is very close, then this becomes not as good of an option to go out and purchase the risky personal loans. If the risk-free rate starts to drop, this is going to look a lot better. It's not a buzzword. It's very much a real thing. Let alone all that money, because whenever that risk-free rate comes down, all of that money that was sitting in there collecting, some pretty good rates, whether they're buying T-bills or what have you, that they look to pour into, maybe taking on some new risk because they want the yield and they're flexible on their risk. So money gets turned into go from money market to equities, and yeah. So we may not see Vito's, I'll answer you in a sec. We may not see zero interest rate environments again, at least for the near future. But that decreasing, rate amount is a massive, massive, I guess, tailwind to equities in general, and then especially banks and any sort of company that is lending and selling out those loans. Ram made an hour-long video with SoFi's biggest bear. Yeah, I mean, I disagree with what they have to say, but honestly, it was overall like a really great video on just understanding banking and financials. I had a really good time listening to it. I just disagree with them on the idea of how the multiple should be valued for a company that does that. So, yeah, it feels a lot like someone saying, Tesla's a car company. Well, it's like, okay, we agree on that idea. We don't agree on the multiple that a company should get just because they sell cars. So, there's no arguing that. It's just their opinion, but overall, their breakdown of fair value accounting versus sort of the CECL metrics and how that might lead to deferred revenue versus sort of upfront revenue, I thought was a great conversation. I had no problems with it. I think the weird thing that people get, or the criticism that Ram has, is that whenever people tweet back to him refuting his argument, that he will just disappear, not answer it, or say that because there is a following for SoFi, that somehow this is an investor relations team that's paying for these followers. Guys, Anthony Noto, I'll show you my DMs with this guy. The dude does not reply to me. He's not paying me to make SoFi content. I like the stock, okay? And that sort of stuff, the just wacky conspiracy shit is just, I don't know. It's a reputation killer. So just because something doesn't fit into your mold doesn't mean that that one thing is good and one thing is bad, I guess. Let's see here. B-Dubs says Tanner is ducking me on chess.com. B-Dubs, check my chess score as of today. I'm a 1400 now, baby. But B-Dubs didn't tell me whenever he told me to come play. He's a 1700, this fucking guy. So, yeah, we're not going to play. I'm not here to get rolled over for no reason. But I know this is not a chess podcast. My ranking has increased 278 points in the last 30 days. That is an astronomical climb. So really happy with my chess game right now. All right, let's go on to some more news. I saw this little piece of news on SoFi. I thought that this was so interesting. I had no idea that they were doing this. And I apologize to all the sports fans. I'm really not a sports guy at all. I don't even watch my local teams. I don't follow championships, anything like this. But the Memphis Redbirds are actually working with SoFi. So not only are they, getting in with basketball, not only are they getting in with golf and with the NFL as well, but they're also dipping some toes into baseball. Quite interesting. One thing from Anthony Noto is that he is just so in love with the sporting area and customer acquisition in that sort of space and getting those customers. I think that's pretty interesting. Especially, this is one thing that you really have to give some credit to Anthony Noto, and he speaks of it best during his call with Kathy Wood, where he talks about the space in streaming sports and like the amount of eyeballs or impressions or whatever that streaming sports is getting over time is just exploding. I mean, it's a freaking multiplier on the amount of views each and every year. And so I think getting those stadiums and these sort of things are pretty interesting. Memphis Redbirds. Who gives an? Yeah, I mean, it's just. I think it shows rather than the actual impact. There's not an impact on the stock, I don't think, but it is interesting of the you know single focus on sporting is the area that we want to be in. We're not here doing any deal. We're doing very specific types of customer acquisition, which is just sporting all across. Um, I can't beat Tevis in chess yet. No, he's a 1500. We are still apart, unfortunately. Okay, let's move on. So I wanted to talk a little bit about this. However, it's still a developing story. I haven't been following it close enough, but um, Synapse, the banking as a service provider for 10 plus million users, ended up closing. We covered this multiple times throughout the last week. CoffeeZilla put out a video about it, how it's affecting Yada Bank, all of these different things. So there's definite coverage around this. But one of the largest banks that they've been working with is Evolve Bank and Trust. And very, very interesting. This I saw come in over the weekend. But here, wait. How do I? Great. Okay. Evolve Bank and Trust just received a cease and desist order. All right. They are wanting that the way that they are actually doing compliance and a lot of their reporting is way below standard. And so, one of the largest banks that worked with Synapse is also getting a big crackdown right now. One of the interesting things that I'm seeing float around about this is SoFi going to look to play the part as that sort of bank, taking in the deposits and being that one-stop shop that they said they would be on the bank side, right? That AWS of fintech. Toto, thank you. Sorry, BaaS is banking as a service. Yeah, not battery as a service. So essentially, the problem is this one very specific issue. I think it's 10 or is it $100 million in assets or $10 billion in assets? There's actually a thing here. Wait, let me find it. I think it's what's his name? Dodd-Frank. The Dodd-Frank Act, $10 billion as I got to get the actual name of it. I didn't look it up before we went live, but whenever a bank crosses that $10 billion in consolidated assets, they actually have a different they change into a new threshold where they can't make as much interchange from their debit programs. So one of the most, I think it's debit and credit. One of the most interesting things about this is that whenever you look at the biggest banking as a service providers, like the banks actually doing the deposits, most of them always have under $10 billion in assets. Look at Evolve, you look at the Bancorp Bank, you look at all those ones. SoFi has passed that. So they actually do not play sort of the most beneficial player, like in terms of wanting that extra interchange that might make it affordable. So I saw some people talking about this idea of SoFi picking it up. I hope so. I mean, maybe, people will look to just larger banks so then they don't have these compliance issues. They'll look to Galileo because they definitely won't have any security or compliance issues. And they'll just choose the much bigger provider. We'll have to hear some commentary from, SoFi in the upcoming quarters about, are they getting a bunch of phone calls coming in? We heard from Scott Johnston that, this is the big talk in fintech right now, but he didn't talk about like how that's affecting their leads or anything like this. So we'll have to figure that out going forward. But it is a big story. I hope people keep their eye open for it, and could definitely affect the tech side of Galileo and SoFi being the bank. Let's go on. I want to talk about an L that I'm taking actively. And it's not one that I made with money, thank God, but it was one that I made with reputation. Um, Apple is a company that I thought would be a massive competitor in the fintech space. They are in the payment space for sure, and that is not slowing down. Um, we'll have to see how it unfolds for their actual savings accounts, but just a little bit ago, there was some pressure under their credit card that they were putting out, the Apple card. Goldman Sachs said, hey, this deal freaking sucks. We want out. It's a piece of crap. Amex is in talks. We don't really know how this is going to change hands or what they're really doing with it. It's been quiet in the last little bit. But, I had some hopes. Well, not hopes. I mean, hey, I hope Apple F's right off. I mean, they're a big, scary player for a lot of the stocks that I end up holding. But it's looking like Apple is continuing to just say, you know what? A lot of these banking features is not something that we want to play a part in. And I love to see it because it gives more room for these smaller, more focused fintechs to rise up and take part in this. But Apple is ending its buy now, pay later service, partnering with a firm, partnering with a bunch of other, issuing banks like Synchrony, like Citigroup. What was the other one? Issuers like Fiserv that offer potentially buy now, pay later solutions or post-purchase installments in credit, debit cards, or just straight up buy now, pay later solutions like Affirm. So they're out of the game. I was wrong. It's seemingly like they ran at fintech and now they're going, you know what? We'll let the professionals handle it, which is actually a great feeling for a lot of the fintechs. Now, people are pointing out PayPal. Well, yeah, I mean, the news that there's a new animation for how people can tap their phones together and transact money has gotten people up in arms about the idea that PayPal is dead. I'm calling absolute bullshit. 430 million users are not transferring over from PayPal over to Apple just because they can tap two phones together. I mean, people notice that as a fun feature from Venmo, but honestly, that's not the reason I'm investing in PayPal. And in fact, I'm not even really like Venmo's great. People still forget branded checkout is where the money is made at PayPal. Okay. They have a lot of ways with the ad platforms, with their new Fastlane products to make large amounts of money. And in fact, they still are ahead of guidance in Q2. And I expect they'll continue to push, them beating guidance throughout 2024 while also buying back a shit ton of shares. So if the price of the stock continues to get depressed, that's fine. Like I said, PayPal can end up buying themselves back over time if they continue to just hold up a reasonable amount of their own business, let alone grow, which they still fricking are doing. But yeah, so I don't believe in PayPal the same way I believe in some of these more futuristic plays like Shift4, like SoFi, like what I believe is the sort of next era of fintech. PayPal is definitely more on the back end. I just believe that it's such at a large discount that it's hard to ignore. But we'll see how it plays out over time. I got some disagreeers. That's fine. This is why I used to not talk about a lot of the stocks that I hold, or why I only really talk about fintech, is because people are going to have their opinions, and it can sway people mentally a bit. Like, oh, did I make the mistake? Rather than realizing that, like, hey, I'm the one that did the fucking DD, so I'm gonna stick, my money where my mouth is. I'm investing in PayPal. I believe in its short-term future, not its long-term future, but I still believe that it's almost like the Warren Buffett cigar play. By the way, I was re-looking at, I'll talk about other plays that I'm just going to brag for a second here, because this was the most exciting news that, we received today by far, just as a stock market. I had a conversation back whenever Nvidia was approaching $1 trillion. 1 trillion. And Stephen Fiorillo, God bless his heart, he is one of the greatest investors in the way that he thinks about stocks. Okay, I don't know about his overall performance. We don't talk about uh, total accounts or whatever. But he was telling me how overvalued Nvidia was. He was comparing it to a lot of the Mag 7 companies, how much freaking free cash flow they make, what the multiples on their GAAP net income is, and comparing that to Nvidia. And Nvidia was at, insane multiples. And he said they would have to grow dramatically to grow into this valuation. Turns out they did. Okay. Credit to Steve. He's now a shareholder of Nvidia. So that's one guy. I give him so much credit, he'll change his mind. But Nvidia is now the largest company in the stock market, which is just mind-blowing. So I made 2 predictions in that video. I said, 1, Nvidia will be the most valued company. This was a members-only video, by the way. So to the members, we made this video about a year or so ago. You guys can check that out. With Stephen Fiorillo and get a little history on this sort of conversation that we were having back then and how he was breaking down the numbers. It was a lot of fun. But this is why you need to stick to your own DD sometimes, because people can sway you one way or another. But really, that I don't know. Do your own due diligence. But what's it called? What was I saying about that? Oh, I said that it was going to be the biggest company in the stock market. Today, that goal has been achieved. And then the next prediction I made is that in my lifetime, Nvidia would be a $10 trillion business. Pretty freaking ambitious, but I hope for it. I never thought that it would be this soon, by the way. And I am taking a victory lap. Which, by the way, my Nvidia video from before is about to pass 100,000 views. Like probably today. Just a lot of fun as well. Yeah, it's only a 3x. Only a 3x from being the biggest company into being the biggiest company. Most bears on Twitter say SoFi is down because institutions are using it as a macro hedge, meaning when shit hits the fan, it is one of the best stocks to short. What are your thoughts on this? I mean, yes, I do believe that. Like, I think that that's true, right? Their business is held up largely from unsecured personal loans. And if you think that there's going to be macro deterioration, SoFi is going to get hurt from that. The one thing that gives me a ton of, good feelings or solace in holding SoFi is that there's not many companies where you can hold where their entire underlying business was stripped out from under them. Anthony Noto is 100% a wartime CEO. The biggest bears, whether you watch that most recent video with Ram and Giuliano, I think that's his name. We just call him Baloney, but he actually did some good DD, so I'll call him by his first name. And I don't know if that's respectful or not, but anyway, the new generation calls each other by their first name. So what was I saying though? Got caught up in the semantics. I don't even think that's the right word. Most bears on Twitter say SoFi is down because institutions. Yeah, so I mean, that is true, but Anthony Noto is a true wartime CEO. They're not giving any credit to the idea that, traditional banks is not the service that people want to have, right? They leave those banks having incredibly low NPS scores. Those banks have extremely high costs on things that right now, the older generations technically need, but the newer generation like me that's signing up for a fintech is not going to need those branches in the future. Same thing. I hate to bring it back to Tesla, but it's just by far the largest example that everyone can sort of think back to. The big idea was, okay, well, if EVs become the big truth, then all of these traditional large players with way more capital are going to convert their factories over to EV. But that's an extra expense that they just simply can't afford to do, while also trying to service their existing customers that still want those, ICE vehicles. So it's the same thing in banking, in my opinion. It'll be so hard for them to trim down their branches while continuing to service their customers that want those tools. Even though that audience is still trimming, it's very hard to still close down a branch, even if there is a small portion of a user base still there. So they're holding on to all of these things that they would call assets. I would call liabilities. And if you're just reading a balance sheet, then you can, look at that as potentially tangible book value. But I would say, hey, that's fucking a liability. like you're putting expenses into old tech, into shit that I wouldn't consider, being put as a premium. And then people say, oh, well, all the new banks are getting into fintech now. And to those people, I say, you haven't tried them. Okay. The idea that your traditional bank that will offer you near zero APY, even while rates are this high, I mean, where is all that profit going to? Their bottom line. And SoFi is able to, and not only just their bottom line, but into dividends for their shareholders. SoFi is giving that money to, back to the consumer. And so everyone goes, you know what? The SoFi bulls are so focused on member growth and they're not actually caring about what's actually happening in the financials. I can guarantee you, like any other business, the customer count is way more impressive. Like there's a reason why none of the big banks talk about their customer counts. It's not a metric that they want to show off. Yet any single SaaS business, any other company will show off their customer counts, especially on a growth perspective, because it's an indicator of future growth, right? What's better to get any sort of financial product through, whether it's a mortgage, whether it's a personal loan? Is it from an external user or is it from an internal, like a customer that you've already acquired? Well, most can probably answer that. It's from a customer they've already acquired. So I think that SoFi is doing a lot of the heavy lifting right now. Oh, we got it. Come on. Hi, Lincoln. Say hi, boy. Yeah, he's a good boy. So I just believe that there's just going to be a difference in how people are valuing this company, and it can be used as a macro hedge. One thing I can also guarantee is that the things that are holding SoFi down, whether it's fair value adjustments that are potentially holding up the stock price, because I do actually think that what Ram and Giuliano were saying were true, but that's why people are considering 2024 as a transitional year, right? Writing down a lot of those fair value assumptions, and just continuing to potentially make better the the sort of balance sheet of the company while we're in this phase of continued high growth and not expecting lending growth, and getting ready for another phase of amazing growth going forward. The customer count is going to grow. The deposits are going to grow. And what do you have when I like how some bears like to point that out as being like, well, that's a problem that they're going to have to address. That's a very, very good problem. Too many customers, too many deposits is like an unbelievable. Those are rich people problems. I'd rather be there than where Lending Club is. And they can disagree, but we'll see who wins. Yeah, everyone say hi to Lincoln. I don't hate SoFi, but if they want to be more than a bank, they need products that I think that he means that can't be copied. I mean, I agree. I don't think that there's a lot of fintechs, like exclusive fintechs, that have banking charters that, host their own deposits and do lending on the other side. How many can I name? Lending Club, Vero. I probably could come up with another one. Those are the two on my mind right now. And In none of those do I see the customer growths or the deposit growths happening nearly at SoFi speed. I got like one of Lincoln's hairs in my between my glasses and my eyes. Um, why is the market closed? Because it's 9 p.m. What else? So, do we want to talk a little bit about Shift 4? So, I don't know if I can say that. Should I save it? Anyway, I'll just say it because we don't know if it's happening or not. Okay. Jared Isaacman, the CEO, is we're looking to schedule a time for him to come on the channel and have a conversation about Shift 4 and why I'm getting so freaking bullish on this company. This is one of the coolest people I have. Like, he's 41 years old. He's a multi-billionaire. He's been to space. He's going to space a second time this year. This is like one of the most accomplished 41-year-olds I've ever seen in my life. He had a business just on the side, like just while he's doing everything else, running Shift 4, being a 16-year-old high school dropout. He also ran a company that bought and sold fighter jets while also training pilots for the US military. He's got like some record about the fastest man to travel around the earth, like as a pilot in a plane. Not talking about him, traveling the earth in a spacecraft. I mean, like, I don't know. It's just not every day do you get to talk with some really accomplished people, and I'm so freaking excited. And the investor relations team essentially is just like, hey, man, nothing's off limits. Obviously, Jared can't answer questions about future growth. Like he can't disclose things that aren't, talked about. But hey, ask him about his insider purchases. Ask it so I'm freaking stoked. Yeah. Personal friend of Elon Musk. So maybe I'll tell him, hey, why don't you bring Elon on? We'll just make this a threesome. Okay, what else? So I've actually never heard of this company. I recently just saw that they've raised roughly about $80 million in venture funding. Company's not public or anything like this, but FEVO, or is it FEVO? FEVO? This is pretty freaking interesting. FEVO announces Shift 4 as preferred payments and POS solution for all their music partners. This leading e-commerce company lets friends shop together on a new website. Announced today that Shift 4 will act as its preferred payment processor for all music festivals and general admission events. So, very interesting. They're working with 800 leading brands, and I mean, freaking SoFi is in most of them as it is. So they're just saying, hey, why don't we just expand and use them, and they can help with the actual payment processing side. We'll handle the checkout side, and bing, bada, boom. So very cool. This is one of two announcements that they named. Here, look. Shift 4 also selected to power the ticketing transactions for the San Diego FC. They are just absolutely dominating in stadiums. Remember, 4 years ago, they didn't have a single stadium. Today, they own over 75% of every stadium for their payment processing, whether that's from ticketing to POS, like the actual point of sale terminals in the stadiums, all across the board. They can do it all. So there's not many solutions that you can look to say, hey, how do we get this company in to a hotel a resort, a stadium, and do the salon and spa, to the restaurants, to the actual booking of guests, to everything, right, across the board, and do it all in one seamless solution. And so they have just been dominating. And so very, very exciting. I can't believe how freaking cheap this company is. Um, Affirm versus Shift 4 in today's prices. Shift 4 all day long, baby. All day long. I like the growth rates better. They're actually making, gap net income. They're, they have positive free cash flow coming in. They're cheap as they're cheap as shit. It's Shift 4 all day long. I own Shift 4. It's like the number one fintech I'm buying right now. I don't even own a firm. So, yeah. Just got here. Am I earlier or later than Tanner? This is actually pre-recorded. I haven't even arrived yet. People are covering other fintechs, talking about, this is why this fintech is going to win over SoFi. People really need to realize how many customers are still at legacy financial institutions, credit unions, regional banks, shit like this, that can port over to these new fintechs. And another thing that I want to cover is the profitability of these businesses. So not only do you need to have the best offering, but you also need to make some freaking money, right? SoFi is making money. They are a bank. They're not paying another bank to put their deposits within those institutions. Not at all, right? SoFi does it all themselves. And not only that, they'll make money from doing that from other fintechs. So in the grand scheme of things, we can play around, we can play the rate game, we can play all these different sort of things to say, hey, one fintech is better than another. But if you can be a full-fledged sort of fintech play, meaning like when I'm saying fintech, which actually is, I would place that in the buzzword category because it's such an engulfing word. But the way that I'm trying to say it is neobank, digital neobank. So if you can be a digital neobank, host deposits, have a brokerage, do all these things, then yeah, I think they win. I think they win over time. Tanner was spicier language than usual. My bad. My bad. I'm sorry. I apologize. Nala, I see you, man. In my opinion, a rising tide lifts all boats. Let's get this less top heavy and back into small caps. I see what you're saying. If you liked Nvidia, you should check out SMCI. I still like Nvidia. I'm still holding to this day. All right. Ladies and gentlemen, thank you all so much for watching. I think that there was a couple other small things that I wanted to talk about. But maybe we'll save them for tomorrow. All right. Really do appreciate it. Hopefully you guys have a great day. Keep enjoying that stock market. But until next time, bye for now.